Philip is the Chief Executive of the National Infrastructure Commission. Phil had time, as I understand it now, setting up the Neighbourhood Renewal Unit so he can do community. And then went to work in the Department for Transport. He's worked at DFT on both Airports Commission and also on HS2. So, Phil, I'm absolutely delighted and hugely grateful that you're going to not only join us by giving us a keynote speech, taking a few questions directly, so do have them ready, but also Phil's going to stay for the panel session as well and join in through that and has to be away by 11:30. So, could you please welcome Phil to the stage?
Thank you. And can I extend apologies on behalf of Lord Adonis as well? I'm sorry you were expecting the headmaster and you have the head boy. But I'll do my best to fill in for him. I thought it would be helpful just to spend a little while, maybe 10 minutes or so, just talking through the background to the National Infrastructure Commission, our remit and how we're working and what the next steps for us are. And a little bit, though I will have to acknowledge right at the beginning of this that our thinking in this area is nascent at the moment. So it's something we're starting to think about rather than something we have all the answers to, but a little bit about how we think issues around public policy and the work of the National Infrastructure Commission intersect. The background to the National Infrastructure Commission, as I see it, relates to the fact that I think we're at quite a crucial moment for infrastructure planning and delivery for the UK. If you look back over history, over the period from the Second World War through to the 1970s and early 80s, it was a period that was all about investment, and a period driving that investment was all about central planning. And we delivered huge amounts as a nation over that period, particularly in terms of providing a national motorway network, in terms of providing the electricity generating capacity that we needed through the CGB to deal with annual rates of growth of up to 3% over that period economically, up to 7% in terms of electricity demand. So that was a really strong period. Having put that capacity in place, clearly over the period from the 80s through into the early part of this century, it was a period that was about making best use of the assets that we have. And in many ways, we have been a world leader in making best use of our infrastructure. We have some of the busiest and most heavily used railway lines in Europe that have seen and accommodated huge increases in passenger and freight demand over the last few years. You look at Heathrow and Gatwick, and they are by a long way the busiest single runway and double runway airports in the world. We manage our electricity system extremely efficiently with a smaller gap between sort of the supply that we can provide and the demand for it than a lot of other countries have. We're still working on the basis of a Victorian sewerage system, and it's still working well for the country. But I think there is an increasing recognition, and we see this across a full range of sectors, that we're reaching the limits. Having been world leaders at making the best of what we've got, having been world leaders at sweating our assets, we're reaching the limits of what can be provided, and we are now hitting a point where a new period of investment is required. That's going to be different from that post-war period. It's going to be a period in which public and private sector invest in infrastructure, but we're seeing across a range of sectors that investment is beginning. In the transport sector, from the CTRL project in the early part of this century, we're now investing in Crossrail. We've got HS2 coming along. We're looking at Crossrail 2 and HS3. We're looking at options for increasing airports capacity. In the energy sector, a huge amount of our generating capacity is reaching life expiry, and we're looking at the country is increasingly aware of the need to think about the long-term plan, both through new generating capacity, but also through providing flexibility. And that was the theme of one of our early reports, through storage and interconnection and other facets. In the water sector, the Thames Tideway Tunnel is being taken forward, the first major new sewerage and drainage project for a very long time in the capital. In the telecommunications sector, we've rolled out 4G. We're starting to look at 5G and how that can be taken forward. So across the piece, this is going to be a period of investment. And as that investment rolls forward, we need a clear strategy for what our priorities are and where that should go. The problem is, over the last few decades, I think most people recognise that the UK hasn't been, and the UK government in particular, hasn't been that great at providing that strategy. We tend to look at infrastructure in a siloed, sectoral way, each of the major infrastructure sectors is looked at by a different department. And although they talk about individual issues, we're not that great at providing a structured framework to look at infrastructure across the piece. We've been very cautious in terms of our investment decisions. There's a benefit to that. We have very few stranded assets compared to a lot of countries, but it does mean that we've tended to wait for problems to arise before we start planning for how we can solve them, and we need to plan earlier and plan more efficiently than that. Similarly, we've tended to find it difficult to generate the political consensus that's needed for major infrastructure projects that can span more than one parliament. You only need to look at the back and forwards on airports expansion to see that plays out. But energy has been a similar issue to other issues. So there's a need for longer term certainty if both public and private sector are going to be able to plan for this. These are not new problems. I think they've been recognised for some time, and so it's no surprise that the National Infrastructure Commission was recommended by, the idea of a National Infrastructure Commission was recommended by two separate reports prior to the 2015 election. One commissioned by the Labour Party, undertaken by Sir John Armitt, which proposed an independent commission to look at long-term infrastructure needs and to produce a regular but not frequent assessment of what the infrastructure priorities are and how those might be addressed. And a second, the LSE Growth Commission, which was chaired by Sir Tim Besley, pardon me, not Sir Tim Besley, I've just ennobled him, Professor Tim Besley and Professor John Reenan, which reached a remarkably similar conclusion, looking at the factors holding back the long-term growth of the UK economy. And it's no surprise that both Tim Besley and John Armitt are now members of the National Infrastructure Commission. So we were established in October. We have two parts to our remit. The first is to carry out a national infrastructure assessment, that long-term assessment of needs, looking across all major infrastructure sectors, looking 10 to 30 years out, thinking about the interactions and the interdependencies, and identifying what the need is over that period, what we think existing plans and sensible assumptions about sort of business as usual investment might deliver, and what that means for where the priorities for action are and what kind of action will be needed. I would stress very hard that while some of that action might be the building of major new capital assets, that's not necessarily what we're about. And I think as many of our recommendations are going to be about regulation, about policy measures, about making the best and more efficient use of the infrastructure that we have, about pricing it correctly, as they will necessarily be about building major new projects. And then the second part of our remit, which links into that, is that we have been asked to carry out more detailed studies of the UK's most pressing infrastructure challenges. We've done the first three of those, which we published just before the budget, looking at London's transport infrastructure, where we came out strongly in favour of Crossrail 2, as long as some strict conditions could be met about the delivery of housing and about the contribution made by London taxpayers. We looked at the long-term priorities for northern transport, particularly for intercity, where we suggested that the focus really needed to be on the links between Manchester and Leeds as the sort of central spine to a northern network. And we looked at energy flexibility and how that can be delivered as we move to a low carbon energy system, and recommended strongly that the government looks at how investment in storage, in interconnection and in demand side response can be promoted. And on the back of that, we're now taking forward two further studies, one looking in the telecommunications sector at the rollout of 5G and at what we can learn from previous generations of telecommunications to make sure that the UK is at the forefront of that as it comes on stream in the next 4 to 5 years. And the second, which is possibly most relevant to this group, but not the only area of our work that's relevant, we're looking at, I think this is a really interesting project because it's looking across infrastructure sectors at the corridor running from Oxford through Milton Keynes to Cambridge, which is home to some of our fastest growing, most productive cities, which has the opportunity and the potential to be a really important node in the UK economy, but which faces some quite significant challenges, particularly but not solely around housing provision. And we're looking at what infrastructure can do to get the conditions in place to ensure that that growth and that productivity continues, that the risks are managed and that the opportunities are capitalised on. And I think that links to how public property and the planning associated with that links into our work. And I think there are three areas. The first is that in making our assessments of long-term infrastructure need, of priorities, particularly as part of the National Infrastructure Assessment, we have to work within a finite budget. The Treasury, our colleagues in the Treasury, as you would expect them to, are thinking very hard about what that budget should be and how it's defined and so on. But it's accepted that our job isn't to produce an uncosted wish list, it's to think about how you can use the money you have most effectively. One of the ways in which you can use the public money that you have most effectively is by making the best commercial use of the public assets that you have. So we're very interested in, for example, deals like the deal recently done at Birmingham New Street, where you can bring new money into the rail industry, into the publicly funded rail industry, unlock new developments through working effectively with private sector partners. Secondly, we're interested in the interaction, and this is very directly related to our work on the Oxford, Milton Keynes, Cambridge corridor. We're interested in the relationship between infrastructure and housing. We're not responsible for housing policy directly, but housing is an absolutely crucial element of both what drives infrastructure and the purpose of infrastructure. Infrastructure is both driven by housing supply need, but also has the opportunity to unlock that. And understanding the opportunities and the potential for housing growth, where that's likely to be located, is a crucial part of our decision making. Looking at the Oxford-Cambridge corridor in particular, the vast majority of the potential sites for new housing, which is desperately needed in that corridor, tend to be public sector land, particularly ex-MOD bases. So there's a huge interaction there which we have to look at. And the third is that we have to think about public land and public property as a site for hosting infrastructure, as well as a place that depends on infrastructure. And this links quite directly, for example, into our work on 5G. If we want the UK to roll out 5G quickly and to be at the forefront of that technology and to unlock the opportunities associated with that, then we need to think about where the facilities that are required for that can be located and how they can be brought out more quickly. In city centres, there's a huge amount of public sector property that could potentially be the right place for that to go, to move fast and to get that in place. That should be a win-win. That should bring revenue into the public sector and enable the technology to be brought out quickly for the private sector. It doesn't sound, we're at the beginnings of this project. We've only talked to one side, but so there's probably more to learn, but it doesn't sound like that's always been the case for generations of telecommunications in the past. So that's something we want to understand, and understand how that learning can play out in other sectors such as water and electricity as well. So that's where we are. I hope that's a useful summary. I'm very happy to take a few questions now, and then I think I'm going to be joining the panel for the next session, and we'll see where we end up. Thank you very much.
Phil, thank you. That was actually fantastic in the circumstances, and what a breadth of activity, but also touching so much on the things we've talked about today and need to worry about in terms of how we use our assets, both the ones that we retain and the ones that need to be used in a different way.
Thank you very much. I'm just going to ask the panel to introduce themselves. Obviously, Phil, we've had a reasonably lengthy introduction from you.
I need no introduction.
So, Paul, perhaps we could start with you.
Yeah, hi, I'm Paul Stanworth. I'm Managing Director of Legal & General Capital, which is one of the parts of Legal & General that's really trying to invest in early stage assets that we believe that long-term investors want to hold. Where we come from really is a business that is a natural holder of long-term assets, but we found ourselves crowded out by Australian or Canadian pension funds, and to some extent some of the larger pension funds. And what we want to try and do is bring a bigger investor universe to those same type of investments. And so LNG Capital was set up essentially to invest in sectors at an earlier stage than we would have done otherwise. The sectors that we focus on are housing, regeneration projects, clean energy, and also alternative finance. For us, it's replacing some of the SME lending that banks have exited. We have a number of projects that we put together, including projects with Rio, and so we're at an early stage of our development to create the asset management model. But we believe that we can contribute a lot to the growth of these asset classes for institutions.
Thanks very much. Martin.
Thank you. I'm Stanhope, the property company. Our pedigree is City and West End offices, which we're immensely proud, but Now, like many others, of course, we're looking broader at mixed use, and I guess the television centre out at White City, 1,500 homes, 500,000 square feet of offices, hotel, is a good example. In the context of this discussion, Adam, in terms of public sector property, of course, like everybody else, we've engaged with great enthusiasm. Early days was the Treasury PFI, much maligned process, but in that case very successful for both sides. More recently, we went through a procurement process with Hammersmith and Fulham Council to be appointed as their partner for their housing estates. We are gone through a very good process with TfL to get on their development panel, and we are currently on the shortlist of 3 for the British Library, so we're well used to the process.
Fantastic. Elaine.
Good morning, everyone. My name is Elaine Hewitt. Just over a year ago now, I was appointed as the CEO of NHS Property Services Limited. Prior to that, I was the Group Property Director at BT for a number of years. And in the middle, a very short stint in Cabinet Office as a representative for Property and FM. I guess what that tells you and me is I've had an interesting experience on both sides of the fence, as it were. And I think what's been particularly enlightening for me over the course of the last year is to see how the dynamics work when you manage a commercial real estate portfolio versus a public sector real estate portfolio. And what I can tell you is they're both very similar and very different at the same time. But I'm sure we'll talk more about that later.
Thanks very much. Sharon.
I'm Sharon Aminusa here. I'm the Chief Operating Officer of the Government Property Unit. You'll probably realise that I have a heavy cold, probably like some of you who've been sneezing in the audience. So apologies. I'm also head of the government property profession. So what that means is we are responsible for the overall strategy of what we do with buildings and land across the government estate, but also on the head of profession side in terms of improving skills and capability around 2,000 property professionals. We don't also just concentrate on the government estate. We've got a programme called One Public Estate that focuses on working with local authorities and seeing how we can combine both assets in terms of better value for the taxpayer, better regeneration opportunities, housing, and so on.
Fantastic. And Sean.
Thank you very much. Good morning, everyone. Sean Andrews, I'm a director at Capita Real Estate, and I specialise in planning and development consultancy. I've spent sort of 20 years working in the public and private sector, actually. I started my career at London Docklands Development Corporation, so I'm sort of hardwired, really, to the public and private partnership space. Recently back from a 6-month tour of duty at Defence Infrastructure Organisation. So hopefully I've got some pretty relevant experiences for the discussion this morning.
Fantastic. Well, I hope that gives you a flavour of the collective experience of the panel you've got today. I'd just like to kick off by asking how, in the panel's experience, partnership models between public and private sectors have evolved, not perhaps taking too long a time frame, but in recent years. And I think I'd like to start with you, Sharon.
There we go, now I cough because beginning of the answer. I think we've seen quite a change. The challenge remains is that in terms of government, I think we need to be more open in terms of the expertise that the private sector can bring. And on the other side, the private sector needs to be a little bit more understanding of the quirkiness of government.
Could you define quirkiness in this context?
Quirkiness is a broad technical term. There are certain processes. So I came in from the private sector nearly 5 years ago now, and there are certain ways of doing things. You have ministers, you have permanent secretaries, you have departments, you have a federated devolved method of property management, for example. We're just working with departments to actually set up a property company that will look at the central management and ownership of certain asset classes. And I think going back to the private-public partnership discussion, it's important that we set up companies like this that allows for suitable amounts of commercialisation that is fair to both parties rather than one-sided, because certain older deals have turned to be, more beneficial for one side than others. But then that also means we need to improve our commercial negotiation skills. We need to understand what we're getting into and actually what our end game is when we go into these arrangements.
Thanks very much. Sean, can I go to you?
Yeah, I think it goes back to Richard's point at the beginning of this morning, really, which has been very clear at the beginning about what the outcomes you're seeking to achieve. Really, I think there's one space. Just to give one example, I think there's one space within which collaboration, I think, between public and private sector has got better over recent years, and I think that's in the sort of the planning space, in particular, in the way in which developers and local planning authorities now work together. And I think if you go back sort of 10, 15 years ago, for sure, there wasn't a huge amount of working together. It was a very adversarial relationship, and I've kind of worked through that process and seen the improvements that closer working can really happen. We're not there yet. There's still plenty of examples, I suspect, of not working as closely together as we ought to, but I think it is one example of how when both parties come together, outcomes can be delivered. And I think, in the housing space in particular, there is clearly a need for closer joint working between the two parties, because housing doesn't get delivered without alignment between the two sectors.
Okay, I'll pick up on a few of those points in a little bit more detail in a second. Martin, can I go to you next, please?
Yes, certainly at our end, I'm starting to see a bit more appetite for what I can loosely call shared risk between public and private. If I say local authority asset-backed vehicle, I hope most people understand the sense that means bringing the public sector, putting the land in at risk, albeit not actually risking public money necessarily. And that style of vehicle will Capita involve with the Barnet procurement exercise for Cricklewood. I mean, that is that style of vehicle as I see it, and Haringey are going through the same process at the moment. And I think that idea that public sector land comes in at risk as a part of the project not only means I believe the project may have more prospects for going ahead, particularly out of London, but also that actually the public sector might do better in the long term. And I think that's a very encouraging trend. The other point I just made briefly, Adam, is that I think I'm confused, and I don't know anybody else, about the link between what public sector property is doing and what the grants regime, if I can call it that, is doing. In other words, there's a myriad of opportunities available to tap into public funds, which is great, but the link between the two, I'm afraid I do not quite understand at this point.
Fantastic. Again, more to pick up on later. And Paul, please.
Yeah, I think from our perspective, I mean, the area that I'm working in is relatively new to looking at the partnerships, but I think the challenges that we face really are that the investment side of the process needs quite a lot of aligning of different parties, just as much as the government side does. And if we're going to bring more than just principal money, i.e. pension funds who are governing their own process, if we're going to bring the £750 billion worth of pension funds, you have to create processes that are governable and predictable for the investors. And I think that's the real challenge. A lot of the schemes that we look at, they're really quite suited to individual principal investors and quite difficult to bring a lot of people to the table. But I think the idea that the covenant or the government covenant being involved in a deal is hugely powerful for investors, because what they're really looking for is income and income security. And the extent to which local governments can input that part of an investment into a process can significantly make it more attractive to investors than maybe just land in sort of private risk. And I think in particular housing, or even affordable type housing, there are opportunities to have the government as the covenant, or even NHS as the covenant, to actually sell that income up front and create a working capital account that supplements the fact that there isn't the government money available. And I think that is really the big opportunity if we can plan and align, the objectives together.
Perhaps that's an appropriate place to bring you in, Elaine.
Yeah, I mean, I think what we need to do collectively is be much more creative about how we do things going forward, because the challenges are becoming greater. So for me, I think what we need to look to achieve is real partnerships, and the vehicle through which you deliver those partnerships is almost irrelevant. That's a structural decision. But I think you're right. I think the point around alignment of interests is absolutely key, and I think those interests are aligning between public and private sector. And for me, this is about not only sharing cost, risk, and value in the conventional sense, but also about sharing expertise. And I see that as a sort of two-way trade. I think historically it's been about public sector buying in private sector expertise. But I think the public sector has managed to do that quite well on its own. But I think there needs to be a two-way flow of expertise. We can help you navigate, the public sector to get these deals done quicker and better. To pick up, the earlier question, we do need to make decisions not only better but faster. So I think that's a collective challenge for everyone in this room.
Fantastic. And finally, just on this first point, Phil, do you want to chip in?
I'm not as closely involved with this specific issue as everyone else on the panel. I think from my experience, and in particular from looking at where sort of infrastructure sort of impinges upon this territory, I would very much back the point that Sean made, that it is that some of in the transport sector in particular, we are increasingly able to align the objectives between the commercial partners and the transport companies, particularly on the rail, both in London and across the country with Network Rail, to deliver strong outcomes. I'm not sure. Clearly, there have been good projects where these things have been aligned well in the housing sector, but I'm not sure that you're quite at the same place, that we've worked out exactly how the commercial side and the public side fit together in housing across the piece. And I'm sure others will say there are some places where it hasn't been aligned on the transport side either. But I think that does feel to me like the challenge. And I think Elaine is absolutely right. It's entirely about getting the contractual structure right. It's about understanding of one another's incentives and working out how to work together and to find a way through that.
Fantastic. A point that's been raised by several members of the panel was the question of speed. Sharon, you said that there has been progress made in terms of public sector structures and being able to speed things up a little bit, but I think you were also quite open that there's quite a long way to go. How do you think that those processes can be speeded up?
I think part of the issue is procurement. There is still, I think, in certain quarters, a view that every time you partner with the private sector or you want to sell something or you go out for services, you have to go to OJU, which it probably is, most people in this room know it's a fairly painful, long process. But it's frankly actually not necessary. It is for certain things, but what I'd personally like to do through One Public Estate is actually have teach-ins to talk about much speedier, more expedient, efficient methods of procurement that can be used. And that, for example, when we talk about value for money, it doesn't mean that you have to go to 100 different partners to check every single person and what the price is. But then that also requires a better knowledge of the market. I think it's also important for us in terms of the public sector to start thinking about the commercial partnerships that we want to go into much earlier in the process. So when there is the timing is appropriate, we're not then taking months, sometimes years, to set the thing up. And I think that's also one of the issues that we're talking about in terms of institutional investors, that there has been traditionally a bit of reticence in terms of that investment from sovereign wealth funds and so on and so forth. Because if you look at that overall picture, only about 8% of funds from those institutional investors are in the public sector. Now, we've got a really good covenant, as we were saying earlier on, but I think people feel nervous about, they're not sure what they're in for, how long it's going to take, how certain the process is going to be. So it's incumbent on us to de-risk the process.
Sure. On the procurement front, I think you're absolutely right that there is perhaps a low-risk attitude from a lot of public sector bodies, and I know that a lot of their colleagues in France in particular aren't so scared of running style of the EU procurement legislation. I don't think I can slander an entire nation. Sean, would you like to pick up on any of that?
Yeah, I think Paul Clark made the point very well this morning around, you know, we're working and living in an environment which is becoming increasingly judicious, and concerns around legal challenge are pretty rife, and there's plenty of good examples of why, you know, you sometimes feel like this. But I think, you know, we need to move into a new space, you know, with the help of government and government clarifying some of the, you know, the rules around procurement in particular. Move into a space where, you know, government bodies and investors feel that they can, you know, partner in a situation which isn't, you know, a full-on competitive dialogue, you know, procurement process. So you know, as I said the point already, I think, you know, we need to move into a different cultural space, but that needs to, you know, that needs to be backed up, I think, by some support from government. So it's good to hear, you know, the things that are happening.
Martin, would you agree with that?
Yes, I mean, as a sort of a buyer, you know, we are thinking about two lots of processes, aren't we? There's a procurement process, and then there's a building delivery process, if I can put it that way. I mean, frankly, our obsession is about the robustness of both processes. So, in the procurement process is the relationship between the landowner, probably the public sector, and us as development partner, really well founded. It will survive 10, 15, even 20 years, and the parties will work together successfully. So the founding of that relationship to us is absolutely crucial, rather than being necessarily that worried about how long it's all going to take. Of course, we're worried because it costs money, but actually it's that long-term partnership that matters to us. Okay. And again, in terms of the, you know, of the building process, again, that process, yes, it's slow, but may I suggest that if it is well done, both in terms of the right building, community engagement, user engagement, you might have a building that is going to be there for perhaps less than the sort of 20 or 30 years that we're all or familiar with at the moment. I'm afraid I'm of my age, the butt of jokes of buildings that I've been involved with have been demolished, you know, and I understand that. And it might be that those buildings are going to be there for 40 or 50 years, and wouldn't that be a wonderful thing, frankly, if we could just get these processes a little bit better?